kidding. Malcolm, what do you got?
I'm just curious, as a person who doesn't own Meta, I have no interest in owning it for the long term. When I hear you talk about the buying opportunity in Meta because of the investments that they are making, I share the concerns of the market, which are to what end, right? So all the other companies that you've named, there's obviously a path to profitability while we're waiting on that big payoff, right? So you talk about the cloud services that are able to, they sell cloud credits and they generate tens of billions of dollars in revenue on the way there. How much advertising can AI create that Meta can sell that justifies the spend in the next 2 to 3 years? Because that's the bet that the market is making sort of against that name right now.
The install base is huge. 60% of people around the globe are using some sort of form of Meta products. And I think that they
without AI, though.
Without yet. Look at what they are starting to monetize it, which is why I talked about the price per ad of up 10%. They are monetizing it. And the last time they went on the spending spree, by the way, Malcolm, I don't like that they're spending a ton. I was not happy when I saw that number.
Okay.
However, I like that they are going to see the return on investments over time. They did this when they did the whole metaverse nightmare, right? And they overspent, then they got religion, and then they actually saw the benefits of their investments elsewhere. So I think it's on sale.
So I agree with the premise that for Amazon and Meta specifically, AI is going to improve their ability to target ads to the perfect right person at the perfect right time. I just am concerned that 70, 80, 90 billion dollars a year in investment to no end is where it's reasonable for shareholders to say, you know what, wait a minute.
No, but they are, right? That's part of the point of why we are where we are in this increased volatility. Meta they're 23% off its 52-week high. To some, it's a sign of caution. To some, it's a sign of opportunity. That's what makes a market. That's the whole point of what we're trying to do here, is have a debate and then leave it out there for you to decide what to do. Mary Erdos, no bubble. Do you agree?
I do agree. Thanks. It's good to be here on the Q block, by the way. We moved on. So I want to go over a couple things.
It's already Monday, but go ahead.
It is Monday. Let's talk about AI first, and then I really want to.
Do you think it's a bubble?
No, no, nowhere near a bubble. Here's why. Two facts. Number one, the man's not making money. Who's the man? Investment banks and bankers. We're not seeing these massive M&A deals. In frivolous seeing
a lot of debt deals.
So I'm talking companies buying other companies with stock. That was the essence of 99-2000, and you had lots of IPOs and lots of secondaries. We're not seeing that.
Right, and we're talking about two completely different phenomenons at different times. You're talking about nascent stage, no revenue, no earning, e-commerce, minuscule companies that the market placed massive bets on of getting to some promised land in the future. We're talking about trillion-dollar companies today, and trying to make a comparison between the two.
I know.
I think it's tough.
That's why I have been making a living here the last 6 months with everyone trying to compare the current valuation and price performance of tech stocks like 99-2000. I think it's bunk. And I think we're in the second or third inning of this whole AI thing. That's number one. Number two, in terms of how these companies are trading, there's so much differentiation. The standard deviation environment in terms of price performance and fundamentals is all over the place. They're not aligned. And that's really a stock pickers type market in that area. The other thing I want to talk about is, we glossed over it too quickly, is the whole CapEx thing. Why is CapEx so important? On a sectoral basis, Scotty, look at the sectors in the S&P 500. The majority of sectors in the S&P 500 are at or near all-time lows in terms of debt to equity. In terms of price to free cash flow, they're at all-time highs. They've got cash to be put to work. And Stephanie's spot on the industrial. It's not just about tech. It's industrials. It's energy. It's utilities. There's going to be massive reinvestment there over the next 3 to 5 years. And I think that's what's also ultimately on a fundamental basis going to lead us into more broadening out in general.
So you don't think that what's been happening in these names is anything more than just a typical rotation out of big time winners into some areas of the market? I had suspected anyway And, I think I said as much in some of the conversations that we had around delivering alpha yesterday that I didn't think that the market or investors would let these kinds of stocks fall that far. They're going to come in at some point, probably soon, and say enough is enough. And maybe today is representative in many ways of that.
When you think they're not coming in, that's when they're coming in. And this is called a correction. And this is very, very healthy. I was worried a couple of weeks ago we had too many bulls. Everybody was way too bullish. Now we've had the bears come out, and that's fantastic news as far as I'm concerned. You don't want everybody on the same page. And so these bears have done their job and shook things up a little bit and afforded an opportunity for Steph to swoop in and talk about Microsoft. And for Malcolm, maybe. Well, I share Malcolm's discontent with Meta. I'm not going to buy that. But this is you nailed it, man. This is what makes a market, and the market is acting the way it should.
You had a lot of air coming out of the momentum trade. The MTUM ETF had its worst day since October 10th. This is yesterday, of course. We are on track now, though, why we bring it up today, looking forward rather than back. We're on track for the third straight down week, okay? Coming into today, Rocket Lab down 26%, Axon down 23%. We mentioned Oracle and what's been happening there. Robinhood's down 14%. Brian, Palantir's had its worst month since December of 2023. Very popular name among people I know who watch this program.
Yep.
Broadcom down 7.5% month to date. That's the worst month since March. Okay. Vistra down 6%. I get the hype and the reality of powering AI. Vistra's worst month since August. You have Vistra, you got Reddit, you got Palantir. I know you have Oracle, but what about those kinds of stocks?
Vistra is one of those stocks that was up on stilts, clearly. So was Reddit. The reason why we own Reddit is it's a longer-term alternative to some other media sides of things. So I think that obviously you had a lot of people chasing that. Palantir is the one that is interesting because obviously with its connectivity and how important it is to the whole AI cycle, it really stands apart relative to all the other stocks. And clearly it's expensive and it has come back down to reality. Oracle is the one that they have this war chest of cash. Traditionally, this is a company that has done an amazing job on their balance sheet. What they're doing in the marketplace in terms of the credit, it is a little bit worrisome, but at the end of the day, this is a longer term core position with us, and the stock went up on stilts, and it's kind of come back down to reality.
But I mean, leave this chart up, please.
Yep.
Because this is what I referenced at the very top of the program.
Right.
The euphoria around their earnings report and their AI outlook lifts the stock. It goes parabolic in September. And then it gives it all back, and then some in November. Is it a warning sign of what else might be out there? If you're sitting in Oracle and you felt great on that day of the massive bump, and you feel like garbage today because it's given it all back, now what? What do you do?
Well, I think that's really healthy when you see a stock like that pull back. And oh, by the way, we've always advised investors, you're not going to be chasing earnings reports anyway. And everyone was really excited about AI, so they came out with great numbers and they chased the stock up. So this actually is very, very healthy.
Why aren't you buying more if it's a core long-term position as you just described?
Because we have a very big position already. And what we do in our portfolio is that we rebalance quarterly. So I think we feel very, very comfortable with our positions in that.
Could I jump in there real quick?
Yes,
Because this is actually where I want to buy Oracle back. I'm sitting here with you, so obviously I can't at the moment, but...
Oh, you can do that.
He's got a phone. Let's go. Right here.
But I was literally on the desk making the call a month ago, maybe in October, when I said from 230 up to about 340, the stock basically ran up on all of the news that got stuffed out there from its earnings period, and the market reacted in a major way. So all the way back down to 230 is why I sold half of our position in it, and I'll be looking to buy it back now at that same level, because all the good stuff about Oracle and the relationships that it's created with OpenAI and others, its relationship to the Stargate project and everything else, that still exists. It's just that the market got way too euphoric, to use your word, for us to invest in that at that 340 level. And I think now is the place where a rational investor should be looking at this and saying, okay, I think this is a place to buy this thing.
Okay.